Hola. How's it going,
Hello.
guys?
How's it going, y'all? How's Portugal
Actually, the first day where the weather doesn't look that good in
already?
like 2 weeks.
Yeah, I actually kind of like it. I'm not a fan of 35 degrees. I'm happy with this. I also don't need Right.
Nice.
sun today. I'm happy with this. Like I don't, as long as it stays mostly dry, I'm good. Like
Yeah, like the last few days when it was really hot, like our usual routine was we would kind of wake up 7 or 8, be outside for the first 2, 3 hours, and then spend like 5 hours inside because it got too hot. And then when it was cooling down again from like whatever, 6 p.m., 7 p.m., we would start going outside again until it got too cold and the bugs got too annoying. We went back inside. So yeah, that was sort of the routine that we had. How's it going in Berlin?
it is Berlin. We had a couple of nice days. It was supposed to be nice this weekend, but yeah, weekend like the week has been tempered and kind of rainy, kind of not rainy, like the usual. It's very inviting for working and staying inside.
Nice. Okay, guys, I think let's go get started with the episode. So today's
No,
topic is gonna be one that we're discussing without Kareem, by the way, if you haven't noticed. Kareem's not here. He's busy.
we miss him
We'll
already.
miss him, but we'll make it. We'll make it anyways. So today's episode is 5 money mistakes every international makes in Germany. The 5 mistakes, just to spoiler a little bit, is I'll figure it out later trap, the health insurance flip flop, how we call it, the rent is dead money fallacy, company pension blind spots. So might be interesting for you if you have a company pension on the desk, and the pension illusion. So these are 5. There's more. If you want us to go over more, let us know. But we just picked it. And if you don't like the if you don't like the mistakes, and it's maybe too negative for you, you can also call it missed opportunities, because they all have a missed opportunity or some opportunity cost to them. Yeah, let's go and start with the first one. So the I'll figure it out later trap. Like imagine you've been in Germany for 5 years, and sort of bank account has been growing some good amount of cash, and you've kind of always said to yourself, yeah, I'm not sure if I'm going to stay in Germany or not. So maybe I'll just keep the money and I'm not going to invest it, or I'm not going to do this and that, and have this sort of like analysis paralysis situation going on. And that's what we sort of mean with the I'll figure it out later trap. Um, that's what we've seen a lot with people who come to us for financial planning. So, like, usually around 4 to 6 years in Germany, and they sort of always thought, "Oh, I'm going to leave in the next 2 years," and they've like that.
Everyone thinks that.
Everyone thinks that they're
They've
still
lived here
here,
for 20 years.
exactly, um, and yeah, and then they've sort of not done anything, and there's obviously like a lot of opportunity cost to that.
Mhm.
Alex, you wanna maybe take it away?
Yeah, the stories. Like delaying your investment decisions. I think it's pretty common. It's also something even Daniel and me are German, even Germans do. But I think it's, if you come from a different country, it happens much easier because it's not just that you don't know where to invest your money or how things work. It's also the uncertainty of, are you going to stay in that country? And even if, like putting it in ETFs or whatever, or like pension insurance or whatever is a real estate seems like a good idea. It's always a question of, does it still make sense for me? If I leave Germany in a few years, right? What are the implications? And that is, I think, on top, very hard to figure out, and that leads to then decision paralysis. And from our clients' perspective, they, like most clients, contact us when they have been in Germany for like 5 to 6 years, and then at that point they're like, okay, I've been here for 5 to 6 years thinking I might leave soon, so I haven't done anything, my cash is piling up, like, maybe I stay, maybe I don't, but I don't want to be in the same situation another 5 years from now, so I better start planning now. But the recommendation here is, of course, like if you go to a new country, first of all, figure out your financial situation. What does it look like? Your cash flow, your net worth, what is it now? And then setting some goals, and then getting into figuring out what you could be investing in, putting it all on the table, trying to understand the ones that seem interesting to you, and get expert advice on it. That's what I would recommend. I wouldn't recommend necessarily waiting 5 years, but that's how I would counter that one. I'm interested actually, like Augusto, how it
Yeah.
was for you? Like, how long did it take
I
you?
can
Like,
resonate so much with this. I feel like the question that the thing that you're saying, the advice that you're saying, I can tell it to my prior self and to everyone I know more aggressively. Like, dude, the first thing you should do is figure out, get advice, get someone to help you. The thing with especially like people who move when they're young, like was my case, but I think it's very general. Like I know a lot of people in this situation. You don't have um you don't have a plan. You don't have an idea. Like the reality that lives behind this statement, I don't know if I'm gonna stay here or not, is I don't know what the next 10 years for my life look like at all. It's not like I don't know if I'm gonna be in Berlin or in Köln or in like Paris. I don't know if I'm gonna be a potato tomorrow. You know, like it's that level of, and in that level of indefinition sets you up for living in this like very passive kind of going with the flow way, which I think is very good for many aspects of life, not for finances. So my experience has been, yeah, like realizing kind of late. Thankfully, it wasn't that late, but realizing a few years in that doesn't matter if I'm staying here 2 days, 2 weeks, 2 years, 5, 10, 20 years. I need a plan. You need to have some sort of like you don't know if you're going to have a family here or there. You don't know if you're going to live in many places or one. You don't know a lot of things, but you know that you need money. That's and you can start from that. You can start from what you know
yeah,
for sure, for a fact, what your values are, your needs are. Um, and you can build backwards from that. And you can start a financial plan with very little information about your future,
yeah,
because there's really like very few things you need to know. You need to know that you're going to retire at some point in your future. You have a desired quality of life. You have a lifespan. You have a potential income with your job that you have. Those are things that once you know those little things, you can start making a plan.
and
And
then,
I feel
yeah,
like that is the
and
key
then you have
there.
a foundation, right? Then you have a foundation that you can build on. You can plan for that, and the moment something
Exactly.
changes, you can adjust that factor, right? If you then, I don't know,
Exactly. You can build
make
on
a
top of it.
family, you adjust that. If you start a
Yeah.
family, you adjust that part. So like, it's of course it's dynamic, but
Hmm.
like it's
Yeah.
a good way to start. Just starting, and
Hmm.
then things become easier, right? So once you
Yeah.
start, it's always about that.
Once you have a view, like
Yeah.
at least some low resolution draft of something, right? I don't know, Daniel. What do you think?
Like, did you also delay your financial plan, or did you jump in?
I mean, for me, I think what the thing here that also comes to mind is the more capital you have, the higher the opportunity cost of not planning.
Yeah.
Hmm.
So yeah, if you maybe only, I don't know, your monthly surplus is very low and you don't have much on your bank account, then yeah, maybe planning is not so urgent, like to just, yeah, like speak the truth, right?
Yeah.
But the more that number grows, either the surplus number or the like not invested or like, yeah, cash number on your bank account, then the opportunity costs just like rise and rise and rise.
I will
So
actually.
naturally, when you're a bit younger, that's what I say. Wait, when you're a bit younger, then
Yeah.
maybe that is not the case, right? So like you don't have that. So
Mm,
naturally, I think the planning started for me, especially for me, it started to become more and more important, or let's say I thought about it more and more once there was some money, right? Which is also natural,
Yeah.
but in hindsight, and now also like obviously thinking a lot about the planning process in itself. I think the earlier you can start, the better, because then, yeah, you can plan
Mm.
you can plan sort of some life events already earlier. You can maybe plan for some income growth, and the
Mm.
planning process, despite like revealing the opportunities, I think is also quite exciting, especially
Yeah.
if it's visualized. To right, like you get all these gurus to say, oh, you need to write down your goals, and then you'll like be more likely to achieve them and stuff. And I think
Yeah.
there is definitely some truth to that. So,
Mm.
and if the written down thing even looks nice, then I'm
Yeah.
yeah. I like aesthetic stuff, so for me that also makes makes a big difference, you know.
I
So
know that you do. I've seen your creations. If you ever log into the dashboard, the Finance Mate dashboard, you'll see what we mean.
Well, a little spoiler thing here, the Finance Mate 2.0 dashboard is coming out very
Opa,
soon. So that will
it's
be
looking
a
here.
very different level. What's sort of what we've been working on here now in Portugal. I have
Yeah.
huge FOMO. That's all I'm going to
Yeah.
say.
Yeah. So I wanted to challenge you before we jump into the next one. I wanted to challenge you on that one. I mean, it's not challenging you because I know we've spoken about this a million times. I know we both think the same, but like perhaps if someone hears, it is true that the more capital you have, the bigger the opportunity cost, right?
Yeah.
But I feel like also if you're not producing a lot of surplus, it is also a very good time to start planning, to start knowing maybe are you living, this would be an amazing realization. Maybe you're living above your means, but most likely,
Yeah.
your income is not matching your needs and you need to think about something.
Yeah.
You need to get creative with your planning. I think those are perhaps like the most interesting problems to solve.
So yeah, that's an important point, I think. So to me, how I always thought about it is the planning process obviously has your age is a very big factor on what the current focus is, right? If
Mm-hmm.
you're like your current age and your current financial situation, like these two
Yeah.
obviously like very, very like direct the focus of the planning aspect. So if you're younger and you're like trying to build a better surplus and stuff, then that is the focus. And the focus is maybe mid more on the budgeting side. If you have a bigger surplus and you like have a good income and all of that, you may be mid 30s, a lot of like us and then your focus is very different. Your focus is more on maybe this whole independence thinking, like, okay, we're like actually I want to like retire as early as possible. I want to get some independence from my job, this and that. Like I have maybe some assets already. I want to build more assets. How do they grow? How do they work together? How can I use them in the future? Like then all of these questions will come up and be addressed in that financial planning process.
yeah, I would agree that planning might be a bit more secondary, but starting to invest is, I think, like when you're younger, is probably the more important thing, and just understanding how it works, right? So because with you have a lot of time then, and even little amounts with compounded interest, if you invest it properly, for the long-term future, makes a huge difference. So even when you start in your 20s and you have only 10, 20, 30, 50 euros, whatever per month that you can spare, like that makes actually a huge difference just because you have, for example, like 10, 15 years more. If you only start with 30, 35, if you invest it for a long time frame. So for example,
I
like
agree. Yeah,
60,
definitely.
if you can spare 10 euros with 20, it makes a lot more of a difference than when you invest it with like 35.
Yeah.
So
Yeah.
that actually
10 more
helps.
years is a lot of time. Yeah.
It's a huge amount of
Oh,
time. Yeah.
agree.
Yeah.
Totally. Yeah.
I'm trying actually. I'm a bit of a personal story. I recently, when I was at my parents' place, my sister still lives there. She's some years younger, and she's been working in Switzerland now for like that's the second year, and obviously also to test our process and stuff, but to get her onto some financial planning. I also went through the process with her, and I've been also trying to encourage her, like, look, you have more enough money on the side to cover any emergencies. Like there's really much more potential for you to make that money work for you, right? And also
Yeah.
started trying to get her to start early. Yeah.
Yeah.
So yeah, very important point. But let's move on
Yeah.
to mistake or missed opportunity number 2. Maybe that's more like a confusion thing. Number 2, health insurance flip flop. And yeah, I don't know what's going on these days. Maybe because I'm more consuming content in that area too. But man, Instagram is flooded with I'm getting flooded with these ads, like these private health
Yeah.
insurance ads. Like,
Yeah.
oh, why you should switch to private health insurance, this and that. Like it's giving
Yeah.
you all these like benefits and stuff like that. And like once you sort of earn a good salary in Germany, then
Yeah.
you pay. That's sort of like their marketing message, right? Like you start paying more for the public health insurance than you would initially for your private health insurance.
Until
So
you're
that's
60, and then that flips around.
so that's how they're like trying to catch you. Look at your salary statement and you're like, what? I paid like 1,100 for my health insurance,
Yeah.
and I could get a private one for what they say is 400, 500 euros, right?
That's a
So
good
I
one.
mean, Alex, that's one of your topics. But
Yeah.
August, you have your hand raised first.
Yeah, no. So, like, just briefly, I think this is a topic. I feel like what you just mentioned is a topic in general that's going to be seen throughout. Is all of these decisions are financial decisions that are made in a context, uh, based on your plans, your a lot of aspects about your life. Um, and we see a lot of cases where people, like, because of the information bubble they are in, as you just cited, they have this top of mind, like, oh, this might be good. And that especially, I think, especially compounds, I would say, with cultural factors as well. Like, for me, coming from Argentina, you hear me say this every episode. It is very easy to believe that a public option is garbage, because in my case, where and how, but it is kind of true. There's exceptions, very many exceptions, but and it is, in the end, like, it's like, for me, the great takeaway, and I think Alex can tell you a lot more on this, but for me, the great takeaway here is it is not an obvious choice. It is not like, if you're making this, if this, then that, you should do private or you should do public. It's a personal choice and it's a trade off. It's the typical cases, like private, generally better service, cheaper now, more expensive later. Public, fantastic if you suddenly don't make any money. It's a very complex choice, and it's not that obvious as like, oh, the private system is broken. Not really. Germany is a pretty awesome country. That's not true.
Yeah. Maybe Alex, you can give like some of the more
Yeah,
specifics, and then
Alex is
I actually
is the
want
man here.
to. Yeah, I actually want to also share like the story of my partner, because she had that decision made like fairly recently, let's say.
Mhm.
Yeah, I think all three of us were in that decision-making process, or at least evaluated also a little bit, and we all know like how complex that actually can be, how many decision factors are there, like how deep the rabbit hole actually is.
Mhm.
Um, yeah, so many decision factors that make it actually fairly complex to make that decision. But yeah, like we can come back to your case, Daniel, a little bit. Let me just give you some context of what I oftentimes see. Like, because on the one hand, I think the information, getting proper information is very difficult here. Because on the one hand, you have people that make money, right? With you switching to private, which is insurance companies, brokers, and so on. So they're clearly biased in the direction of, switch to private health insurance and marketing that. And that should be very clear. There's that information, like maybe they help you to find the best private health insurance, but there's clearly an incentive to highlight the benefits of private health insurance. And on the other side, usually people have friends or family that tell them a bit of a cautionary tale, and stories of how switching to private health insurance in Germany can actually be very costly and cause you really a headache of getting back to public health insurance.
Mhm.
And then I think people are like either on the side of, hey, private health insurance, like that ad look nice. Let me talk to a broker. The broker signs you up and your private health insurance. Maybe like 5 days after you entered Germany, you're on private health insurance, and that's it. Made that decision. Or you're on the side of exploring it a little bit, realizing it's complicated,
Mhm.
maybe talking to a broker, and then your friends and family tell you, no, definitely don't do it because it gets so expensive and forget about it. And then you get afraid. And I mean, most people at that point probably wouldn't make the jump anymore to private health insurance unless they really get into it and try to understand if it makes sense for them. Because the point here is, for some people it makes sense, for others it doesn't make sense. So I think that's kind of the topic here. It's more about finding the right kind of information and finding somebody that really analyzes with you if it is the right for you and for your situation, and that you understand it to then make an informed decision for the future. Because yeah, it's a lifetime kind of decision for most people that want to stay in Germany.
Yeah, it's and again, as Augusto always says, like, what's the context for your health insurance? The context, as Augusto also just said, like,
Yeah.
public health insurance gets expensive if on paper a lot, if you earn a lot of money, because there will be a part then that you have to pay yourself instead of the your employer. And but when you, for example, don't have a job anymore, and either you quit, get fired, whatever it is, then the minimum amount you pay for that gets adjusted as well, right? And then you have like, you pay sort of the minimum amount, which is like 200 something euros in most cases,
56.
or even lower.
Uh-huh.
And then even if you were like, for example, if you want to get Arbeitslosengeld, for a friend who's like currently in that process, then they also sign you up to they make you sign up for the public one again,
Mhm.
unless you've been private for the last 5 years, and then you need to get all of these exemption things. And that
Mhm.
gets like super tricky. And if you've not been in
Yeah.
the last 5 years, then they basically force you to go back on public, because they're not going to pay for your private one. And so that, like, these are all the decisions, right? And yeah, my girlfriend, for example, she switched to private 2 years ago after being in Berlin for 3, right? So that's sort of the thing, because for her it was just, yeah, she was like also earning more, like that she's like, well, I'm not going to pay this. Then she just had like, she mainly did it from a more emotional perspective, saying like, I want a good service, I want to be able to speak to somebody that has like really good English. She comes from a country that has also very good healthcare, South Africa, which is maybe counterintuitive for some, but their healthcare
Mhm.
is really, really good. And now, like, for her, like, she was like really happy with that choice, because yeah, direct access to specialists and like good, yeah, overall better coverage, and the English
Mhm.
like speaking factor, like feeling more comfortable, right, in a
Mhm.
foreign country anyways. Like that's often a big factor.
Which, by the way, I can say, not sure if it's something like sharing the name of an insurer is appropriate here, but my insurer is public and they tick all of those boxes fantastically. Sometimes I have to force them to speak in German to me because they have on file that I'm English speaking and they speak to me in English. And their English is fantastic. So it's like just a matter of pride for me. Customer service is amazing.
But not, I mean, I'm not only with the like the insurance company, let's say, but
Yeah.
more with like the doctors that you have then access
And
to, right?
yeah, and the doctors, I don't know why. Maybe I was lucky, but all the doctors I've had through public were also fantastic, except for
Okay,
maybe
well,
2. And I always had like direct access to a specialist. I never had to go through a house arts, for example.
oh wow,
It's the
okay.
model that I have. But it's even like I was surprised by that. I called the company and the insurer and I was like, can I just go to, and yeah, you have pain in there. You should just go to their doctor.
Okay,
So
interesting.
it was, I mean, I think it's not like I cannot just go to a random specialist and say, hey, how's it going? But they are pretty permissive in that sense. I'm not sure. I'm honestly
Well, if you
zero.
guys want to know what it is, then you need to add Augusto on LinkedIn and write him a DM.
If you want to know what my insurer is. But definitely, like, I think they're fantastic.
Yeah, great.
I
So
just came back from private in Switzerland, and it's I don't know. I think that the service is very comparable.
interesting.
Um,
Wow, surprise.
yeah, in terms of quality.
Cool.
I'm sure it doesn't apply to everyone. I think I got very lucky, but yeah, it is. It is. You don't have to go private to get good service. That's my main takeaway here.
Okay, okay. Interesting. Cool. Yeah, big topic, worth its own episode for sure. Let's move on. Mistake number 3, the rent is dead money
Mm-hmm.
fallacy.
Mm-hmm.
I guess meaning that, all renting a place is like paying like somebody else's mortgage sort of thing. And like, well, why shouldn't I pay my own mortgage and like build up my own real estate and stuff like that? I guess
Mm-hmm.
that's sort of the mindset a lot of people have. But yeah, real estate is very much also not only a pure numbers thing, but very emotional, and it can be very strategic
Mm-hmm.
in terms of like tax benefits and
Yeah.
how you actually then use the property and
Mm-hmm.
all of that. Alex, you wanna take it?
It's usually when people think about buying property, they have oftentimes experience with that already at their home country, and it's one way to build wealth. And culturally, often real estate is something that is regarded highly as an investment, also because it's tangible. And I think probably especially in countries where there's a lot of volatility in the markets, real estate is a bit more like you buy your own house, you don't have to pay rent necessarily then anymore. So it's probably a safe place, I think, to put your money. In Germany, can be, buying your own house, so you don't have to pay rent anymore, can be a good investment. And I think we talked about Kareem's investment, like if you look at the numbers, it turns out to be really good. I think Augusto is happy with his, but what people don't often forget about is that how to actually, from a numbers perspective, to compare renting versus buying, because oftentimes it's like, instead of paying my landlord, I just pay off the house, which is actually not the case necessarily, right? For example, especially with the high interest rate now, you're mostly paying the bank instead of your landlord.
You're renting from the bank. Yeah.
You're renting from the
If
bank,
you
right?
have a 4% interest rate, you're basically renting from the bank.
Exactly. So instead of paying somebody, like the house belongs to you in theory, like you can do with it whatever.
Until you
But
miss
you're paying the
payment.
exactly, you're paying the interest rate. You're not necessarily paying the house off, right? If it's relatively high. And the other part is there are additional costs. The additional cost, you do have the down payment, which is money you could be otherwise investing in, for example, the stock market, right? And there are like oftentimes when you have a high interest rate, then you and maintenance costs, for example, then you often end up paying more per month for living in accommodation than if you were renting. So that's something that in theory you should also then if you're fair, invest, right? So if you're renting, in theory, if you want to make the calculation even, and we have a super nice calculator to look at that in our dashboard, it's something you should factor in to then see which one is actually better, and your interest rate, and maybe a bit counterintuitive.
Sorry, just to the calculator. Like, what do you need to compare? I think that was a bit fast right now. So if you're just listening, it might have been a bit unclear. So what Alex is saying, in all fairness, what you should compare is you have the two sides. One is the renting side, and one is the buying the place side. And the buying the place side has your down payment. It has your repayments, right? The monthly amount that you have to pay to the bank, and it has the interest cost, and it has the maintenance costs. So all of these costs sum up could easily be like, if you want the same sort of place, could easily be like double of what you have in rent. All of these costs combined, right? So in all fairness, what Alex is saying, okay, like let's just simple example, you pay 1,000 rent and your mortgage and all the other costs would be 2,000. Then in theory you would have €1,000 difference. And what Alex said, then you should like invest that €1,000 every month that you would not be paying towards your own property, and see where you'd end up. And that's sort of what the calculator does.
Yes. Thanks for summing that up. And then you have a fair comparison, and then you can decide, if financially buying is actually good, like the right decision for you, or if you should stick to renting. Both, of course, have non-financial benefits and drawbacks that I think we don't need to go into. Like just from a financial perspective, people often think that buying is the smarter choice. Like we're just saying, it depends on some factors. And maybe one additional factor that you should also look at is what is your current rent? Because if, like you're living in Berlin for like 15 years now and your rent is still €500,
You should rent forever and never leave that apartment.
That's also something that our calculator takes into consideration. But your current rent at the moment is definitely something that should also go in this calculation.
Yeah. I would say, kind of the general takeaway from all of these, and I'm going to keep coming back to this, is there's no general good advice. Like perhaps the only general good advice is don't live above your means, save money, invest it smartly. Like if you want to get into more detail than that, it becomes personal. It's not obvious that renting is bad. It's not obvious that owning is good, or the other way around. It's not obvious. Depends on your own market situation, your plans. Kind of one small thing to add to what you all were saying. I always like to say, real estate has a lot of non-financial upsides and also downsides. And one of the things that for me makes it not obvious is like it is a responsibility, and a serious one. Is like you are like on your name is an asset that is worth probably more than your, for most people, more than your entire net worth. It's a very big chunk of it. And there are things that can happen to it that you have to cover. You need to make sure that you're properly insured for certain damages. If it has a mortgage, if you haven't insured certain damages, you may be liable for a lot of money. And also, like in general, authorities, you are the owner. If I don't know, if a window breaks and you're in a certain type of building or something, you need to make sure that you fix it. You need to go there and actually fix it. So it is a lot of good things, a lot of bad things, not only financial. So again, bottom line, there's no general advice that you can give to every human being on the planet that is going to be good, other than like, I don't know, make sure you're breathing, eat healthy.
All right. Before we move on to the next
Very,
one,
very little.
I think Daniel started this mistake and was saying like there's also the opportunity to buy property and become a landlord in Germany, which is very different. It's usually not what people have in mind when they think of buying property, but it's definitely something to look at when you are living in Germany, because it can reduce your income tax quite significantly. So that can be a very good investment. And it's not part of the rent versus buy fallacy in that sense, or like calculation. It's a completely different calculation because it works financially very different, but it's definitely something that we would recommend people to get into and understand and see if that actually makes sense for them. And for most people that earn a lot of money, pay a lot of income tax, it can be a very, very interesting investment in Germany.
Yeah, definitely. I wanted to close on that also, if you wouldn't have mentioned. If you think about these like buckets that we just mentioned, like calculating, okay, the one side has the mortgage plus the down payment plus the monthly payments plus the interest plus the maintenance. The interest and the maintenance is something that you then like have a completely different calculation with, because it has effects on your income tax. We're not going into detail maybe that. We have other podcasts that do that. So if you're considering that, or if you've ever heard about that, I mean, nowadays there's also, a lot of voices on LinkedIn, etc., who speak a lot about properties and that it's a good investment and stuff. And yeah, it can be, but just going for that without having a holistic plan is, at least what we believe to be, not the best idea. That's why we are doing finance management and financial planning, right? So yeah, let's move on to number 4, the company pension blind spot. Alex, I'm a client, okay? So I come to you and I say, hey, Alex, my company is giving me free money. Should I take it or should I not take it?
I mean, it depends, right? There's no easy answer to that. Definitely, it's not a very standardized product in that sense, that you can just say, okay, that's generally a good deal. They're very different kinds of company pension. So you would have to look really in a lot of detail of what it is your company is actually offering. And the most important things that I would be looking at is what kind of company pension is it? How much does the employer contribute to it? Like the minimum is they have to match your contribution with like 15%. But usually that is then already a sign that you should stay away from it. I mean, of course, this is not financial advice here on the podcast, but it's usually a signal that there might be better investments. And then
maybe I got a bit excited with this punchline, but maybe
Yeah.
to take a step back, company pensions, right? What are they? There are pension plans that are provided through your company, and usually what happens is they say, hey, we have this scheme, which is a negative word, but it can be positive, where you can like basically save an amount per month, take it from your salary, and we sort of match it with a certain percentage from the company because it's a company benefit, and that money like sort of then gets into some sort of like an insurance usually, and that insurance that can have a lot of different, let's say, what's the word, like categories, like different types of insurances that the company can choose, and like that's sort of the whole thing around the company pension. So there's like something that you can put the money towards, then your employer will give you more money, and together that money then gets like quote unquote invested or insured, and like that's sort of what company pensions are all about. And what we hear a lot is, especially if you hear employer matching, that There are companies who 15% is the minimum, but there's companies who may be very generous or have good employee benefits. They give you 100%, 150%, 200%. And then you feel like, oh, wow, if I give $100, then they give another 200. So that should be really good, right? So that's why I said free money, just so you know where we're coming from.
Yeah, but even with that, in the end, even if the matching is 50%, for example, and it looks like that pretty much with the taxes that you save and social contributions and the employer matching, it seems like a very sweet deal. Company pensions do have some drawbacks on costs, on how the money is being invested and so on. So you still have to check your individual plan, your individual situation, what you plan to do. I plan to stay in Germany. I plan to stay with the company and so on. And then you can make a personal decision. Say company pensions is not something that is where you can follow generalized advice. And also to say that here maybe company pensions are not the same as public pension or state pension, because they're especially with internationals, that seems to be a bit of a confusion for when you come from other countries, like maybe US and UK, where it's more common to have company pensions and it's a big pillar of your retirement savings. In Germany, it's not the same. The company pensions is something that your company is offering you, but most of the times it's actually through an insurance company. So it's more like a private pension in that sense than a state pension. So it's definitely something that you need to really look into and not just blindly subscribe to. Augusto, you also had, did you have experience in the past with company pensions? Is that something you looked into?
Exactly. So I didn't have exactly company pension, but I had a very good stock option scheme in a company that I used to work at. And yeah, I was young. I was not very aware of what I was doing. So it was something that I was kind of it took me a while to get around to understand how it worked and make use of. And I even lost a few for lack of exercising. This was when I was very, very young. Thankfully I learned from that. But yeah, I definitely resonate with a lot of feelings that people have around this, about it feels like quote unquote free money. It feels like something you should perhaps not pay attention to, not touch. It's kind of an autopilot. Um, and is in the end a part of your portfolio, right? Something you should definitely consider as part of your portfolio, rebalance, that sort of thing. But yeah, and I guess, yeah, I guess this is my experience. I resonate with this idea of kind of leaving it there for a long time until
Yeah,
kind of
and usually, I mean, Alex, you can give a bit more insights. We have some cases where we work on it. That sounded a bit negative right now what we said, but it can also be very positive. There's good company pension things out there. They're hard to find, hard to get to, in my opinion. But there is usually what we've experienced so far and what we know from the market is that oftentimes, and correct me there if I'm wrong, Alex, but oftentimes the companies themselves, the people who manage them, is usually HR as part of the company benefits and compensation package and all of this. And oftentimes they are also not super deep on the details. So then they have to talk to people who work at the big insurance companies, and then let's say a third party that can sort of communicate between the two parties to get them aligned is often what we've seen working best to let's say ensure that the employee at the end of the day has really good benefits.
Yeah. So what we also do is, when we have actually a look at the company pension schemes of our clients, is to see if it could be done better. And then if our clients want it, we can have a chat with or actually one of our partners. We have a partner that specializes on company pension, because we do financial planning. And if we see that an opportunity to do something better, then we actually get one of our partners involved to talks to the company and to the HR department to see if they can improve what our clients already offered. Sometimes, for example, you ask clients, they're not even offered a company pension, which your company is legally obliged to offer you something. And that's, for example, then when we do have some US clients who really would want to have their company pension and use it, especially when the company gives you decent benefits and decent matching, where then our partner is actually knows which company pensions work with US clients, because that sometimes is not a given. They can then help implement a company pension scheme at your company that actually supports you. So you can make use of the, for example, generous matching of your employer. And that's also things that we support with, right? So we don't stop at the analysis part. If there's something that can be improved, and we know we have a partner that can help you with that, then we also put you in touch and make sure that you can actually improve the opportunities for investing.
Perfect. Okay. Time-wise, guys, let's go with mistake number 5 and try to do it in 5 minutes. So let's see if we let's see if we can do that.
Yeah, we can do that.
The pension illusion. I guess here the main point that we want to get people to think about, at least from my point of view, is that pensions, you have like your state pension, you have your foreign pension. We just talked about company pension, but let's like stick with like the state pension sort of a thing. Is okay, like how does the pension system work in Germany? Am I eligible? How much money will I get out of it? How does it work if I move countries? And so on and so forth, right? So there's a lot of questions that people have when they come here, and the bureaucratic country Germany is. It's not super easy to figure out, and it's not necessarily the most interesting topic either, let's be honest. So it's not something like, oh my God, I've been waiting all week to go and tackle this on the weekend, sort
My
of
dream come
topic,
true.
and yeah, like then like sort of working around that.
Hmm.
And then what's sort of the illusion part?
The illusion part is like, on the one hand, people don't calculate their pension, right? It's a bit, I mean, you can calculate roughly how much money you get out of your public pension, but people don't do it necessarily, and they just trust that, everything is gonna be all right, and there's gonna be money. So that's one way of looking at it. You just don't, again. And the other part is just completely disregarding anything that comes from the public hand, right? So some of our clients will say, hey, I don't even want to calculate with anything that's not in my personal bank account, which I don't necessarily disagree with, but of course, for planning, I would still, like look at it and try to understand what is, even if you look at it from a pessimistic point of view, what is something I can reckon with, right? And for example, for the public pension, I'm relatively sure that there is going to be some money, there's going to be a public pension in the future. The question is like, how much money do you get out of it? And what's the realistic assumption, right?
Yeah.
And for that, you just need to understand how the public pension system works and how it's calculated to then come up with a, let's say, realistic or pessimistic analysis of how much money you can actually expect.
Mhm.
And that's something also we have a nice pension calculator for, that kind of like gives you that number, because the pension department in Germany, well, they just give you a number, I would say, and they don't give a lot of context, and they don't tell you like that you have to necessarily pay tax on it, or how much tax, how much social contribution. So it's a number that's hard to do anything with, right? It's hard to just use that number and be like, yeah,
Yeah.
great.
There's
So
been so many calculators mentioned in this podcast. Maybe we should call it "It's Calculators, Mate."
calculators. So yeah, I mean that's what we're building for, right? Like there are a lot of
That's exactly.
fallacies, and there's a lot of need for analysis to actually help our clients understand how things work, and that's why we do build those calculators, right? Because
Yeah.
a lot of things are personal, and they do need some analysis to actually come up with a proper answer to that question.
It removes I think, again, if we go back to everything we said until now, all of these mistakes, missed opportunities are just thinking qualitatively about something that is quantitative. And this is what we build calculators for. It's like, we need to take into account your entire financial life, not just the single thing that you're asking for. As Alex is saying, like, you don't have to go in the extremes. Like, for me, for example, I spent a lot of time not thinking at all about public retirement because I come from a background where that is funny money. And here it's not. It's probably not going to be your entire retirement, most likely, for many people, but it's going to be a lot. It's going to be a number. It's a real thing that exists and works, and it works well. So you need to be like, think quantitatively about these things.
Yeah, and then there's a lot of things that you don't know, right? So if you, let's say, only stay 4 years or you stay 6 years, like what happens? Like, could you, all the money that you paid in
You can get it
automatically,
back.
that they forced you to pay in, like, can you get that out? How can you get that out? Like, what are
Sometimes you
sort of
can, sometimes you can't.
exactly, like all of
That's where you move
all of
out
this
to.
stuff, and
Yeah.
yeah, that's
So
what we're
very,
also here to figure out.
I know that there's a lot of interest actually around that topic.
Mhm.
The public pension. We are doing on Meetup some seminars around that topic, and people are generally interested, I think, how the public pension system works and understanding it, because you're forced to pay into it once, like if you're an employee, right? Like you have to. So
yeah,
it's
no
definitely
choice.
something where, like, if you don't do anything else, that's probably the one thing you are doing. And then most people like to at least understand where the money is going, what happens to it, how can you calculate how much money you might be getting out of it. And it's definitely a topic that people are interested in, I would say. But again, it's a bit difficult and tricky to get the right information. And what we do here is, like, we look at your personal situation. We provide you with the knowledge that you need to actually understand how things work, and then we calculate your personal based on your personal situation, or what you can expect.
I mean, I would be interested too, or I am interested too, because I'm paying hundreds of euros every month towards it. I kind of want to know what I'm getting back for it in the end, right?
Exactly.
But yeah, cool. Okay, guys, let's call it an episode. It's been fun. Fun things have to end sometimes. So let's call it an episode, and yeah, see you next week. Bye bye.
Same this week.
Have a great one.